It's KBKW's Coffee Talk on FM 94.7 and AM 1450. And it's time now for the Insider Report with Everett Hughes. Good morning, Everett.
I'm here.
Yes. And how are you doing?
I am doing well. Actually, as of today, I'm headed to Portland today, and I'm going to be in another seminar. So we get new update stuff next week. But this week, I'm going to talk about something that nobody has successfully answered to me.
Okay.
How do we calculate our tax credit the individuals get for buying insurance?
Now, is this buying insurance or on the exchange or both or what?
Well, now here's the deal.
Okay.
As we've talked about the last couple months, if you go to that calculator, put in all of that information, the exchange is calling the reduction between the premium and what you actually pay, they're calling that a credit from the government. That's what they're calling that. A credit from the government. A credit from the government.
Mm-hmm.
Well, I've been saying from the beginning, well, that's what the exchange is saying. I haven't seen anything from the IRS that says how this credit's going to work when you file your tax return in 2015. What I know from the IRS is that there's going to be a penalty if you have no insurance. And it has not even been substantiated exactly how all that reporting is even going to be done. And with the difficulty they've been having the last couple of weeks, and we don't even need to get into that.
No.
You know, the difficulty they've been having, it's going to be amazing to see how they're ultimately even going to come up with this reporting.
Now, on Monday I had Kathy and Dave come in, and they talked about the state exchange is working much better than the federal exchange.
That's what I've heard.
Yes.
That's what my people that I know here in Mason County, I've got a friend who's working for the hospital, and he's supervising about 8 in-person assisters, and I've heard this on NPR. Washington State is one of the best exchanges in the nation, from what I've heard.
No, that's good.
Well, it is good. Now, and so, you know, the exchanges is working as well as it can, but when it comes to the credit, the only credit I see, that whole terminology, from what I've gotten the last month and a half, the whole concept of a credit is coming totally from the exchange. When you go in and you use the calculator, and here's the premium, and you only pay this much because of your income and number of people, and they're calling that a credit from the government. But all it really is a reduction in premium amount. And they're calling that the credit from the government. Now I heard something Monday on the Wall Street Journal report, you know, way early in the morning, and they had somebody on there talking about the same thing, and they addressed self-employed people get an adjustment to income because of the health insurance they're paying. Well, Doug, that adjustment exists already for self-employed people that pay their own medical insurance. We already have that, and it's not a credit, it's an adjustment. But now, as far as credits, the only hardcore thing, and this may change, but right now, the only hardcore thing I've heard about an actual credit is if the employer goes to the exchange looking for the 50% credit for covering his employees. As far as a tax credit for buying your own insurance, I have yet to see that coming from the Internal Revenue Code.
Interesting stuff.
I hear about it from the exchange, but the exchange is not the Internal Revenue Service.
Wow. Well, we're almost out of time, but if people want more info on this and other things that have to do with their taxes, you can give Everett a call at his offices at 533-4131, or go to that fancy Dan website.
Yes, everetthughes.com.
Well, you have yourself a good week, and we'll talk to you next Wednesday.
You certainly will.
All right, sounds good. Have a good one.